Uh-oh. I knew something was wrong. Hang on. Uh-oh. Oh, interesting. Must have been a platform update, huh? All right, testing. 1, 2, 3. Testing 1, 2, 3. The rain in Spain falls mainly on the plains. The ants in France stay mainly in your pants. Hang on, I gotta change something here. Change it. All right, cool. So without further ado, it is a Monday. It's an opportunity to trade Forex. Let's go. Ba-dum-bum-bum. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money cannot afford to lose. Ni hao ma! Good to see you. Hi, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com, the sponsor of the Forex.Today YouTube channel. Good to see you. Ask questions, get involved. I'll do my best to share my 15 to 20 years of experience with you so that you can become a success sooner than later. If you're benefiting from these webinars, if you enjoy them, if you like them, for whatever reason, please pay it back. Visit TradersWay.com, open up an account, download MT4, test out the execution speed, test out the spread, test out the swaps, and the bottom line is allow Traders Way to earn your loyalty and respect. And then when you are ready to trade real money, please choose Traders Way as your prime broker. That's it. It's a symbiotic relationship. They're investing into you now, and when you feel like you're ready, you invest back into them. Well, let's get this all squared away. This ain't moving. Wow, yeah, something's funky today. Something's funky. Everything's slow. Anyways, we'll leave it at that. That's pretty good. Okay. Risk on or risk off? The funny thing is, this is what I asked people last week. With that in mind, you should have already today done and well on to the next day, to the next week, so on and so forth. Oh, someone says one of my monitors is brighter. That might be the case. It might be the case, but it might just be the angle. But I'll monkey with that later. Cool. So risk off. That tells you what? Typically Japanese yen strength, typically US dollar strength, and typically Swiss franc strength. Okay? Now, risk off, if that has to do with the contraction in global macroeconomics, you will get things like a deterioration in oil prices. Why would you need energy if you're shutting down factories? So this is where we are currently. Okay? And last week, if you remember, let's go through this. Do you remember oil was going up and up and up and up and up? What did I tell you? I said, look, if you didn't buy it here or if you didn't buy it the week before, if you're just freaking out and chasing price because of some news blip that came out, then you're not in control. The market's in control. And I said, it's pretty simple. Are you the boss? Do you guys remember all that? People said, yeah, I'm the boss. Then I'm like, you need to stay in control. You don't chase price up after it's moving. You should be benefiting from price moving up because you bought it low, or you bought it low, or you bought it low. The fact that it's moving in giant green candles is really irrelevant in the moment because you already bought it or you didn't already have bought it. And look what happened if you were a chaser. Okay? Didn't I say that these skyrocketing prices is where bankruptcy lives for people that don't have control over their trading? Now you might say, oh, that's what he was talking about. That's what he meant. What's up, Daniel? The night shift, huh? So Daniel's an exotic dancer. Uh-huh. Save your tips, boy. So anyways, interesting lesson, right? Yeah, put them in your trading account. Cool. Neat, right? So look what happened. Maybe you did a front run on plan A. Maybe you didn't. Either way, you either lost a little bit or you didn't trade. That's being in control. That's what being in control is like. Okay, so now let's go back to the big psych level of this 50. Okay, and I think we talked about this maybe a month and a half ago when we were on our way down to 50. Do you guys remember? I said something like, get ready, at the psychological level, you're either a bull or a bear. It's either going to 65 or 35. Remember all that? And then I also said, I don't expect a V-shaped reversal on this, that you'd probably need a double bottom of a double bottom. This being a double bottom, but now you'd probably need a double bottom of this double bottom before you get any sort of lasting move up, because it was down for so long that it shouldn't be down for long and then straight back up, okay? We just don't have that kind of world right now, right? So anyways, there's that. There's also the zombie apocalypse, which is also still a possibility. In fact, every day you might feel it's more of a possibility, okay? So we had a family meeting at the McDonald household last night in the great room, and we've decided to build a prepper stash. Yeah. My wife's like, I think we should be. I'm like, whoa, a prepper stash? My son's like, a prepper stash. Let's build a prepper stash. She's like, what's a prepper stash? It's where you prepare for the end of the world. So anyways, we got my son and I got all excited. Oh my God, wait, you got to have this, you got to have this, and then you have to have this. And the reason we get all excited because we play video games where you come across prepper stashes. You're like, oh, look, ammo and food and resources, and you load up your backpack and stuff. So anyways, we're all into it. Careful, Carlos. Some people might be sensitive to such jokes. Anyways. Yeah. RJ's already on it. Yeah. Sweet. So we're going to build a prepper stash. Why not? Okay. So it'd be interesting to see if there is a double bottom of a double bottom. If there is a zombie apocalypse, we'll probably breach below 30. Now that, or I mean 50, and that gets very interesting. Something else that we talked about maybe a couple of months ago is having oil prices fall is very, 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 very bad for macroeconomics, right? Because it's extremely deflationary. And what has every central bank tried to do? Lower interest rates to spur economic activity to create inflation. So to have oil drop significantly just crushes inflation because of the relative change in oil prices, right? So if oil prices drop, 40% in just a few months, what does that do to month-over-month inflation or year-over-year inflation? Just destroys it. So what do the central banks do? They cut interest rates even further, right? So anyways, we got to be, I don't actually want that because it gets strange. I don't want things to get strange. How about this? Speaking about strange, another little side note here. About, I don't know, let me guess. About 8 years ago, I was doing some training at FX Bootcamp. Maybe it was even 10 years ago. But it was right during right in the worst part of the financial crisis. And I did probably a 30 or 40 minute presentation on how the 10-year T-note cannot drop below 2%. That it was impossible. And the reason I said it was just how Newtonian physics works. If the 10-year T-note drops below 2%, then the 30-day will drop below, it'll go negative. And I'm like, you can't have negative interest rates. No joke, I actually did this. And I believed it, honestly, because I'd never seen it before, right? Just like it's never happened in the history of the world. Well, now we do have negative interest rates, which is interesting. The 10-year T-note has been below 2% for about 5 years or something, right? But did you see that the 30-year U.S. bond is significantly below 2% now? The 30-year, forget the 10-year, the 30-year U.S. bond is below 2%. Wow! Holy smokes. Holy smokes. So anyways, wowzer, huh? Yeah, everything's impossible until it happens. Yeah. So, very interesting time. Where does it go from here? Where do we go from here? All right. So I don't know. So I still hope for normal. All right. Bitcoin. Let's do some Bitcoin. We had this as supportive. Looks like it's supportive. Cool. Okay. Down, 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 down. Stable, 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 stable. So what do you think? Zombie apocalypse, this would probably go more like up, right? Oh, did you sell it off the 10K? Yeah, well, whatever, right? So you got two choices of what you can do. It's not a tough decision, as you can see, all right? You kind of got this wave if you want that. And then you got this sort of action if you want that, depending if you're a bull or a bear, right? Because the bulls and bears will just treat this differently. That's all. Oops, I wanted that pink. Okay. They'll just treat this differently. And a bull is going to look at it on the short term like this. Okay. And then breach it, pull back and up. And bears are going to say, no, 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 we're sloping down, 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 down. And they're going to follow the slope, right? Y equals mx plus b. Okay, you're going to do the slope here. Okay. Right, so Anthony, are you shorting the stocks or what? You guys should be making money on it. Anyways, Yeah, so there's that. Let's take a look at gold. 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 Okay, gapped up. It's moving up so fast it's hard to catch. Okay. This is Friday. This is Thursday. We haven't had an easy trade since Wednesday. And then, but how about using the moving averages? Up, 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 down, down, buy, up, 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 down, down, buy, up, 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 down, down, buy, up, 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 down, down, buy, up, up, down, down. I don't know what to do! Okay, bro. Okay. Still looking for that blue jean baby queen. Prettiest girl I've ever seen. See her shake on the movie screen. Games do. All right. So let's redraw our lines. Ba-da-da-da-da-da-da-da. Let me lock in some more profit. Can I get 300? Can I get 300? Give me 300. 300 going once. 300 going twice. 300! Boom! We got 300 on that one. Can we get 250? Give me 250. Can we get 250? Can we get 250? Where's 250? It's a little too low, huh? 250 is right on the line. I don't want to do that. 250. I know I'm splitting hairs, but I'm going to move it an extra 15 pips back. 235 on that one. All right. So anyways, we got 550 locked on that pair. Now, a whole bunch of my trades. Do you remember last week or something I had like 11 open trades? Now I got 3. These 2 trades and my Lira trade, which is being punished because it's risk off, but my goal is to hold it for a year. But anyways, everything got knocked out, right? So do you remember, I think it was just last week, like Wednesday or something, I jammed the stop on a whole bunch. I'm like, I'll lock 200 on this one. I'll lock 150 on this one. You guys remember that? I'm moving all these stops, moving on my stops, locking in profit on all those trades. They're all out except these 2 Swissy trades and my Lira, right? That's it. Wowza! Wowza! So anyways, yeah, cleared house. Yeah, but do you notice I'd moved all my stops and then everything skyrocketed, right? So whatever it was, the little bird landed on my shoulder and whispered in my ear, "Get out! Get out! Get out!" So I did. Okay, so anyways, yeah, that was that. That killed that. Let's take a look at Beast. Beast is slowing down on the daily anyways. Okay? And a big decline. So we had a up, 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 roll reversal down. So, right, draw your roll reversal. Right? Up, 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 up. And then you go like, it's not going to be perfect, but you get the idea that a pullback is going to be in there. Up, 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 up. And then you get the idea here. The pullback should be in here. And then, right, so you get this and up, 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 up. And then the pullback is supposed to be here. And you see instead, lower, low, lower, high, lower, low, lower, high. Yen is gaining strength as it should be. So this is bullish, this is bullish, this is bullish, this is shields up, red alert, freak out if you're a bull. Now, if you change the scenario here, you know what? I'm going to change the indicator. What would a bear do from here on in? Because remember, bears are bears before this, 3-day move. So bears are already selling at 43.90. Oh wait, we've already kicked off that price. Okay, and how are they doing it? Okay, they're using this this. Role reversal. Okay? And then tomorrow, I'll tell you what I'm going to do. If we get a lower low, I'm going to use that as the resistance. So here's what I'm planning. Legend in my own mind. This is what I'm planning. So let's say it goes down, 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 down. It's going to come up and then down, down, down. Okay? Okay. What do you stink? Brothers of the same mind, unblind. All right. So anyways, I hope you see something similar. If you want to look at it at a higher time frame as a bull, then you're going to play this. But still as a bull, you're probably going to need a little bit of right? Tori Pines. What's up, Tori? So we can switch this and see bullish bullish point of view. This is a buy zone if you're a bull. So that's the higher time frame. So which one do you want to be? You see what I mean? If you don't have a bias, then you're scratching your head going, what do I do? What do I do? What do I do? Remember, only you know what to do. Once you know what you want to do, then technical analysis just puts you in at a decent price. But it won't tell you what to do. And you're better off just guessing, flipping a coin, but you need to know what to do. So if you are a bull on this, you have a very clear mandate to have been buying it around 143.50. Okay? You got it? So what do you want to do? Up is risk on. Down is risk off. That's a good one, Anthony. My suggestion is you flip a coin. For the next, and it's going to answer what you're going to do for the next 90 days. Okay? That's what I suggest, MHP. If you don't have an opinion on risk on or risk off, then you flip a coin, and it doesn't matter what happens. Heads, you're a bull. Tails, you're a bear. That's cool. As long as you have a set bias, all the other things are going to lock in. Okay? So if you're a bull, this is a very, 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 very obvious buy. Extremely, extremely obvious. Okay? If you don't look to buy now as a bull in this zone, you simply don't know how to trade. That's it. I don't know if being a bull is right, but that's the right price if you're a bull, and you start looking for that. And of course, if you lose, you know how that, bulls know how to manage their risk and all that kind of stuff. So you either don't get a trade or you take a small loss or whatever. But if you're a bull, like, oh my God, this is what you're supposed to be buying. Okay? If you're a bear, you're stuck on a shorter time frame and you missed your opportunity to sell earlier. But don't worry, you're going to get a new opportunity to sell a little higher. Okay? You understand? So a bear is going to be thinking something more like, let's say, I'll make this extreme, but this is what a bear is thinking, okay? Which one's going to work? I don't know. 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 Nor do you. So the only thing we know is good prices to buy and good prices to sell. If we both do our job properly, we both will probably make money. And whoever gets it right will make more money than the person that got it wrong. But we will both be a little bit richer than yesterday. Okay? Look at this, guys. The first minute of the first day of the week. So bears are clearly thinking this. But do we know if they're right? No, we don't. Bulls clearly should be looking at this role reversal. Clearly. Without a doubt. So a bull should be thinking this now. Which one do we know is right? Bulls that think it'll go up? Or bears which think it'll go down? Which one's right? We actually don't know, but we know the right prices. This is where bulls should be buying. This and this is where bears should be selling. So depending on which one you are, you know exactly what to do. If you don't know if you're a bull, if you don't know if you're a bear, it ain't going to work out well for you. So literally flipping a coin will help you. Okay? Do you understand that? Once you're in well, you'll be able to manage your risk well, and you're going to have a shot at the net, and every once in a while you're going to score. Sorry, that's my programmer freaking out again. Somehow he knows when I do webinars. All right. Baby G says, pound could be dangerous over the next few weeks. Brexit, resume, blah, 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 blah. Yeah, well, you need to buy at very, very obvious support and then manage the risk. And the risk shouldn't be that bad because you're buying such a nice dip. Okay? Or you're selling high at resistance. Now, here's the funniest thing, right? Oops. We knew this was resistance last week, this price right here. And this little thing here last week would have said, sell at 144.84 and a half. A half a pip accuracy. It's actually a tenth of a pip accuracy. And then the market opens up there and you're like, oh, what an interesting coincidence, huh? Right? Got to have plans in advance. The only way you can have an advanced plan, the only way you can plan in advance is to have a set bias. It's the only way to do it. Looks like it might be a head and shoulder. Yeah, but that's not what gives you that. Well, no, don't look at it that way. I think I know what you're seeing here. No, don't. But don't let that make a decision for you. That's not how you make a decision, okay? You look at a bigger time frame or you look at fundamentals. And you say, I'm a bull or I'm a bear. Okay? I want long-term trends or an argument that you can formulate based on fundamentals. Okay? Brexit risk, balance of trade, central banking policy, so on and so forth. And from that argument, you say, I'm a bull, or you say I'm a bear, and then you're done. From that, now you just simply use technical analysis, right? But don't do things like open up an hourly chart and say, that looks like a head and shoulders pattern, I guess I'm a bear. No! No! That is not how you do it. If you were a bear yesterday, or last week, or last month, then maybe you could say that looks like a head and shoulders pattern. But there's easier things going on here. This is very, 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 very bearish. Extremely bearish. Okay? So you should have been, right? If trading properly, you should have been sort of in here or for sure in here. And then maybe rethinking here. But the head and shoulders or potential head and shoulders, whatever you see there, I'm not confirming or denying, but okay, but that shouldn't be making decisions for you. You should have already been ready, willing, and able to sell this hours ago, days ago, and weeks ago. Okay? You're the one that creates the head and shoulders pattern, right? By the way it happens is there's some bulls on this, and they're reacting to news. They're buying, buying, buying. You see this? This is actually, you can almost take a chapter out of my book, right? This is the 2155 cross. You're bullish, right? Here's the 21, right? You're bullish and aggressive. Here's a retest. You're still bullish and aggressive. Here's the drop to the 55. 55 is now in control. Okay? And this sets up a double top, lower high, or a reversal, really. And it kind of happened to here, kind of double top, then back to the 55, and then lower low. This predicted this. And what's happening is bears got out, some bulls got in, more bulls got in, more bulls got in, some bulls took profit, the rest of the bulls took profit, and now the bears got in, the bears got in, the bears got in. Okay? I'd rather you call that an old man easing into a hot bath than a head and shoulders, because the head and shoulders is sort of after the fact and is created by the structure of the market turning from bullish to bearish. I'd rather you just say you were a bear here, maybe you took profit or this knocked you out, great. You were not in the market, you were not in the market. Now you're like, oh my God, I need to get in the market soon. And then either here because of this price, because remember, we knew this price, this whole period to the left, we had it right here. Next projected zone, sell at 44, right before 45. It was actually 144.85 or something, right? So we knew this all last week. That's your price. 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 That's your sell price. That's your sell price. That's your sell price, right? Do you sell here? No. Do you sell here? No. Do you sell here? No. Oh, this is going to set up a sell. Where's my sell? Oh, it's right here. It's right here. It's right here. So you're either short here, or you're short here, or you're going to short here, and then it's going to breach, and then you're going to short here, and then we're going to hit this and re-challenge that support. Okay? If you're a bull, you're nailing these because these are all buys. And this is your out. Okay? And if you're a bear, these were all your sells. This is your out, and this is your new in, your new in, your new in. But if you don't know if you're a bull, if you don't know if you're a bear, you're going to be a liquidity event for those that do know if they're a bull or a bear. Okay? Why do you make it so complicated? You're a bull or a bear. It's easy. Flip a coin. Now you're done for 90 days. Do you understand? Why 90 days? Because often when I say flip a coin, people think I mean 90 minutes or 90 hours. No, 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 no. At least 90 days. But 90 days, make it for a quarter. Okay? So I think when we did quarter analysis last year, I think I said down in the first quarter, up in the second quarter, sideways in the third quarter, and up in the fourth quarter, right? That's a typical year. Inside of all of this, you have like Fed meetings. Now what I think we could have, let's change colors, and I'll make it a little thicker in case it's hard to see. Okay, now if we had to break the year with the, oops, that's a terrible. Guess I should just use my tool to do it. Okay, here's the year. Okay, there's the year, let's say. So right off the bat from the first day, I said down. In fact, I said down, up, and then down. Now, knowing what we have now with Corona spreading, it could still be down. So I'm going to say I'm leaning toward more down than up, then down like this, and then a late November, December charge up. So really connect it this way, right? That's, at the moment, my current best guess. Meta says, should the bias be defined by pairs or by one currency? One currency. So for example, Meta, say things like, are you buying the dollar or selling the dollar? And that could be your whole career right there. Like I say in the book, be a greenback guru. Master everything you need to know about the US dollar. Literally master it. Spend years studying it. You should be able to name off all the FOMC voting members and tell me what kind of personality they have. For example. Okay? Or the yen, or the Swiss franc. Something to that effect. But the US dollar is the best because it's the reserve currency, right? Think about it this way. Every central bank on the planet has US dollars in the vault. And there are many, 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 many countries around the world that are pegged to the US currency. Okay? How many central banks around the world are pegged to the Japanese yen? I think probably none, right? And then think about how many central banks around the world are pegged to the Swiss franc. Again, probably none. Now, they might hold Swiss francs. Swiss franc is a safety currency. It always has. It's one of the only currencies that is still backed, I think, 40% by silver prices. So there's actually silver somewhere in Switzerland backing their currency. So, you know, it's looked at as a safe haven, right? So I would look at these things. But the dollar is unique because every country in the world is exposed to the US dollar. Mr. Highvolt says, hey, if the stock market goes down, people are actually sell dollars by selling the stocks. No, not necessarily. The vast majority of stockholders are Americans. So how many US dollars do they sell when they cash out of the stock market? None. Right? They don't sell any dollars. Also, in that case, if the vast majority of the stock market is people's 401ks, they don't really exit that quickly out of these things, right? They're retirement accounts, so you don't really exit. In some cases, you can't exit. Okay? So, not necessarily. Now, foreigners selling dollars or selling their stock or their bonds and bringing their money home, yeah, that would weaken the dollar. But generally speaking, Mr. Highvolt, when the U.S. stock market falls, the dollar gets strong. The reason for it is, first of all, nobody really cares about the stock market. The stock market is a big, giant lie. It's not a lie. It's just, it's not a true valuation of anything. It's just people stuffing money into a retirement account. It doesn't mean anything. Okay? Now, The bond market's different. And the bond market is way, 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 way bigger than the stock market. Okay? So use the bond market more than anything. And right now, things like the 30-year bond has dropped below 2%. Holy snickersnucker. Well, what's happened to the US dollar lately? Where do I have it? Is it down here? Did I miss it? Yeah. Okay. So we've had, what, a 3-week rally right now in the dollar against the pound. Right? A 3 or 4 week rally in the dollar versus the Aussie. Right? A 3 or 4 week rally in the dollar versus the Kiwi. And a 2-week rally in the dollar versus the Canadian dollar, and so on and so forth. So what does that strong US dollar mean? People around the world, investors around the world, because it's not Americans. Americans have no impact on the dollar. Investors around the world are buying the 30-year US bond. Okay? And to do that, they need to buy the US dollar first because they're foreigners. And now they buy that 30-year bond because 2% is pretty good when your country is paying negative 0.2%. Right? So negative 0.2 versus plus 0.2. And you're like, and it's not going to change anytime soon. So you're like, I'll buy the American, right? And that's dropping the yields further and pushing up prices further, right? So there's a bond market rally, a very, very significant bond market rally in the United States of America. Okay? Do you understand that? You have to look at it that way. There is a huge rally in U.S. Treasuries. Huge. And if the dollar's getting strong on the back of that rally, then it's foreigners buying. Sure, baby G, that's cool. You guys get it? It's not the stock market. I don't think foreigners really want to buy more Apple shares. La 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 la. All right, welcome to Forex.Today. Oh, for sure, eh? Oh, faux show. This is the news calendar for this week. let's first of all just look at the big news. GDP on Thursday. Okay? And tomorrow's pound news. Cool. So mark that down. Probably should be trading pound today based on what you think is going to happen tomorrow. And then dollar. Okay, durable goods, too volatile. I don't really care. But GDP obviously is important, but it is backward looking. Now, Ed says 2 rate cuts priced in now in 2020. Cool. I asked you guys to do this analysis 2 weeks ago. So maybe you did it, Ed. But I asked people to go through and watch the pricing, determine if Fed cuts are being priced in, and if so, buy the US dollar. How many guys remember that from 2 weeks ago? Maybe it was 3 weeks ago, right when that dollar got strong. How many people remember that? I pulled it up, I just quickly showed it, and then I'm like, you need to do this. And I said, go through, watch these dates, look at the changes, look at specifically June and the SEP. And if you see a change in the actual negotiation of prices of real money, then you should be buying the US dollar. Done. Like, done. Just factual. Just do that, you'll be a success. Okay? Then why don't people do it? Like, a few people do it, right? So Ed did it. But why is it that most people, why is it that 96% of people don't do it? It's weird, right? Right? Maybe you don't believe me or something. Like, I don't know. I don't understand. Do I use the COT report? Yeah, it's right here. Coco, do you use it? Pro Trader says they don't have the, but I've explained it over video over video over video. How many times have I done it in the last year? 8 times? Oh, Coco says no. Well, okay. Yeah, Ed's been around, right, Ed? Yeah. Yeah, Reb says it's so boring. It's true. It is boring. But I'm trying to teach you how to be bigger, right? Not just a scalper or intraday trader, which is totally cool. But on top of that, I want you to start thinking like an investor as a financier and such. Anthony says, yeah, nobody believes me, which is fine. Hopefully I'm entertaining though. All right, so let's take a look at the week adding medium stuff in here, okay? So yes, we got tomorrow's inflation out of the UK. That's always interesting because of Brexit, right? German GDP, fine, but I think that's being overshadowed now. First of all GDP is backward looking. But right now, I think we're more worried about Italy going zombie apocalypse, right? Can you imagine beautiful zombies? Can you imagine? Beautiful zombies, like, I know she's dead, but that Italian zombie is beautiful. If someone was going to eat my face, I want her to eat my face off. So anyways, we might have some beautiful zombies. That's much more important than backward-looking German GDP. Although if you had to pick a GDP, that's the best one. But even then, it's probably not that interesting, right? The Carnival of Venice, yeah. Yeah, they canceled Carnival though, right? So now it's Carnival Cruises. So anyways, yeah, okay, so we're watching Italy now more than that. And then we got a speech out of Bank of Canada. Great. Probably not going to make a big announcement. Great. So all the way to Thursday, right? Just the regular old stuff. Now, current account, right, and balance of trade, maybe you should Google that and educate yourself that if you don't know what that means. That has to do with, you know, well, I'll have you Google it. It could be important, probably not. But anyways, you want to, eventually you want to know that kind of stuff. Okay, cool. Yeah. Are we going to get inflation out of Japan? They're going for 1%, so we'll see. Anyways, that probably won't be a big market mover. And then Friday, German jobs. Okay. And PCE. Now, the interesting thing about US PCE is it's the inflation indicator that the Fed uses. So if we get a bad number out of PCE, and I don't expect it quite yet, but I do believe we're going to miss. But then I think the next PCE in March is going to be really bad. Now, why would I say that? Raven says thinks Germany might leave the EU. Germany is an exporting nation. They would never, ever, ever leave the EU because now they get to trade with all those European countries, which generally buy more than they sell. Germany sells more than they buy. So there's no way in the world Germany would ever leave. It'd be like saying, you know, I don't know, like Microsoft just stopped selling Windows. Like, what? Germany, yeah, but it's better than that, right? It's a mad, it's almost like, think of it as a colonial scenario. It would be like, why would an imperial country wake up one day and say, yeah, you know, let's stop all of this, let's let all our colonies go, right? Like, you don't just wake up and say things like that, because the reason you have the colonies is that you extract their resources for cheap and then you force them to buy your exports. That's a pretty good deal if you're the imperialist, right? So like if you're Germany and you're selling your German stuff to all these other EU countries, and because you have a trade relationship with them, it gives your products an unfair advantage over other foreign products like Chinese products or something, right? Or Canadian products or American products, all that kind of stuff. German products will always be a little more accessible to the other EU countries. Like, why would you give that up? It doesn't make any sense. It's like, it's a perfect ideal scenario for a country that manufactures and exports. Okay. Plus, they get the Dutch to bail out all the other countries anyways, right? Like maybe the Dutch should leave, but not the Germans. So, anyways, pretty light on the news. Oh, I didn't answer this question. So PCE is like CPI. They're very similar. It's the basket, how the basket changes better. It's sort of like, what's the difference between CPI and PCE? I'd say, well, what's the difference between a simple moving average and an exponential moving average? You're like, well, the exponential is a little more sensitive to current market conditions. Well, that's the difference between PCE and CPI. CPI is like a simple moving average. The basket doesn't really change. And then PCE, the basket changes more often, gives you more realistic, okay? But nonetheless, they're both measures of inflation, right? Of the two, the Fed uses PCE. Cool. Now, what did I say earlier would impact inflation negatively? Yeah, oil prices are falling. Nope. No, interest rates are impacted by the central bank, who adjusts the interest rates through money supply because of inflation, because. No, it's not interest rates. Interest rates are a byproduct. So in this case, falling oil prices, as I suggested earlier, will lower inflation, which would lower PCE, which would then make this month and more importantly next month significantly lower than now. So next month's PCE will be bad. Okay? So you guys are talking about negative yield bonds and interest rates. You're describing the bandage, not the bullet hole, nor the smoking gun. So I'm talking about the smoking gun, not the bullet hole, and you're talking about the bandage. No, so you got it all backwards. Okay, the bandage was there because there's a bullet hole. And why is there a bullet hole? Well, you might want to check out the smoking gun. Anyways. And for those that are interested in the Commitment of Traders report, this is the nicest one you'll ever find. Okay? This is the prettiest and easiest one to understand. For example, the black line is the net. We have falling, a falling interest in euro. Another way of looking at it is the number of contracts where people are shorting the euro has gone up, and there's been no real change in buyers. Okay, so from the beginning of the year, there's been almost no change in the number of people long the euro, but more and more and more people are shorting the euro, and you can see the net is falling, and you can see, generally speaking, the euro USD has fallen. Why is that? There are more sellers. Is that relevant information to you? Again, let me outline this. This is the price in the euro dollar. That is the euro dollar. Okay? This is the number of sellers. This is the number of buyers. That was supposed to be a lighter blue, but it doesn't appear to be. Let's do it this way. This is the buyers. This is the sellers. So you can see there's clearly more sellers than buyers. And therefore, the net, which is add up all the sellers and add up all the buyers, and you can see there's more sellers, more sellers, more sellers, more sellers. Okay, beautiful. Therefore, one would think that the euro dollar would fall. Oh, cool, it has been. But now, not only do you know that the euro dollar is falling, but you also know why. Is it buyers a dollar? Sort of, because this is U.S. contracts. But you also know there are people selling like crazy, and there's no buyers. So that might impact, how bearish are you? I was so bearish that... And then you have to put something funny at the end there. Okay? There must be like a reverent joke or something. All right. You got it? How can one sell with no buyers? There's no change in the number of bullish contracts, which means these bullish contracts are probably, they're not listed as hedgers, but there must be some sort of hedging. But we've separated out actual hedgers. So anyways, there's just no change. Okay? There's just no change. In fact, right, so what do you want to call this? 150,000 contracts? Okay? This goes back years now. Then it went up to about 175,000, and then it's dropped back to about 150. And now we're just sort of farting around here, somewhere around 150,000. Okay? That's just the number of contracts, euro contracts that people bought, that they're holding right now. At the very same time, some people want to sell euro. But more people, see 225,000 open contracts versus 150. Then it went up to 250. Then it went all the way down to 175. Then it's been back up to about 200, about 225, 200, 200, 200, 200, 200, 200, 200, 200, 225, 250, 275, on our way up to 300,000 bearish euro contracts on the exchange, because these are actual future contracts. Okay? So it's how many buyers, how many actual long euro contracts are open right now. That's what that is. So it's very factual. Now, is it global? No, that's not global. This is on an exchange. These are futures contracts. So this is on an exchange in the United States of America, right? So if you're a buyer of a euro, you're kind of like seller of the dollar, and if you're a seller of the euro, you're kind of like a buyer of the dollar, because these future contracts are all priced in dollars. Yeah, CME, one of them. CME something. Can't remember if it's Chicago Board of Trade or not. I don't think it's COBOT, right? So yeah, CME something. Everything's CME now, right? But it might be ICE. I don't know. It doesn't. But there's an exchange, and it's in America. So the opposite of the euro is the dollar, because this is priced in dollars. But anyways, this is literally the number of contracts long right now. And the cool thing is we can go all the way back to March 2019 and see the change. And there's been almost no change. A slight change, but basically no change. Right? And then there's been, right, buyers of bearishness, right? So more bears, less bears, slightly more bears, and more recently, if you're looking at the rate of change, a significant increase in euro bears. Significant increase from the middle of January to now. There are more bears and no change. So let's make up sort of a relative change. Let's say there's 20% more bears, right? And 0% more bulls. That's how to think of it. So by definition, the market is more bearish than it used to be. That's what this net is. You want to add up, right? So let's say if there was 20% more bears and 5% more bulls, there's only, right, the market's only negative 15% bearish, right? So you have to calculate what the change was. Okay? In this case, it got more bearish and not even a little bit more bullish. Okay? So that's the commitment of traders report. And I like the COT because it tells me why is the euro dollar going down. Okay? People don't like euro. Yes, Coco, I've done this over the last 15 years, probably 35 times. What is the commitment of traders report? What does it mean? How to trade it? Probably, I'm guessing. Hang on. Where is this? This one, maybe. Oh, yeah. There we go. In sooth, I know not why. All right, cool. Cool. But what do you think? So, I think a really nice calendar is here. I think a very, 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 very nice COT is here. My humble opinion, this is the nicest COT that I've ever used. And I used to pay $150 a month to get the COT data. And I got it on an Excel spreadsheet. Man, you guys got it so good. Leo, they don't predict. The question is, does the COT predict a slowdown or a change in trend? It doesn't predict anything. It just tells you the facts. And it's lagging about a week. So, I believe it's Tuesday by 5 p.m. Large institutional investors report to the Commodity Futures Trading Commission all their open positions. Okay? And it's reported Friday at what, 4? I think it is. So this might be a 4 p.m. as well. If that's for me, that's how I do it. But of course, the government wouldn't do that. But anyways, let's talk about that. I'm going to put that. So Tuesday at 4 p.m., large institutional investors report their positions to the CFTC, and then it's all gathered, calculated, put into this, and released Friday at 4 p.m. So it's pretty current. Like, if you only trade a 15-minute, it's irrelevant to you because you don't have any trend anyways. You don't even know any of this exists, right? But if you're more interested in fundamentals and changes in trend in the market and just trends and reasons like why is this doing this and why is that doing that, COT is useful because on Friday you're getting all relevant information from Tuesday. That's pretty good. And it tells you, so again, the way that this works is large institutional investors indicate whether they're long or how many contracts long and how many contracts short that they're in the market. Large institutional investors, some of which are what are called bona fide hedgers, which means it might be RJ Nabisco hedging wheat prices, for example. Well, if you're a bona fide hedger, you might be short something, but you're not trying to make money. You're trying to not lose money. And so anyways, so the IRS comes in and says, well, if you're a bona fide hedger, you tell us, the government, so it's IRS and CFTC, that you're a bona fide hedger, and therefore we'll tax you differently on your gains and losses in the market because we know you're not trying to make money. So if you made money in the futures market, it's because you lost money in the cash market, balance it off, and you locked in a price. So you don't really pay taxes on the gains and the losses. It's like it never happened. So you have to then register as a bona fide hedger. So we take all that hedging data and we remove that. We remove that from the number of open and short, right? Long and short open contracts. Okay? But then, because everything's done through an exchange, we have the total number of open contracts. We can see that. How many? Total. You can see the total number of contracts, long and short, in the market, minus the bona fide hedgers. Okay? Then you got these guys. They're large institutional investors. They're not hedgers, so they're speculators. Okay? So now we know how many long and how many short. But you'll also notice that if you subtract them out, minus speculators, there's still some contracts left over. So total minus speculators, large institutional speculators, buying and selling in the market to make money, minus the bona fide hedgers, which are long and short the market, but they're not trying to make money, and it still doesn't equal. So what's left over? Dumb money is left over, okay? Because you subtracted the bona fide hedgers, you subtracted the large institutional speculators, and everything else is us. And that's how they figure that out. Right? Total minus the speculators, minus the hedgers, there's still some contracts left over. That's dumb money. So what I'm reporting here is I've removed the bona fide hedgers and I've removed the dumb money. Oop, that's a dumb money. And so all we have left when we look at this chart is large institutional speculators, otherwise known as smart money. And smart money right now is selling the heck out of the euro. And down, up, down is the price. That's price right here, price. And this is the number of bearish contracts. Cool, right? Easy peasy lemon squeezy. Nice. So I have 5 hours of classes tonight. Is anyone going to study for 5 hours? Study Forex for 5 hours? Oh, Dan the Man says, Wayne, how did the reading paper go from a week ago? I got 100%. They said it was very interesting and extremely concise. So I don't know what everyone else got. I don't know if it was easy or not, but when a professor tells you it's extremely concise and very interesting, I think it worked out. So I got 100%. Yeah, oh, thank you. So right now, kitty cat coming down hard. Why? Oil's falling and yen should be in a risk off mode, right? Beautiful selling zone and everything. Beautiful. Beautiful. Guess we should probably have it like... Cool. I love the Japanese yen. Baby G. Andrew says, Wayne, your thoughts on USD Mexican peso? Well, it skyrocketed up, knocked me out for a profit, went all the way through me, all the way through the central pivot, all the way through the M3, all the way through the R1, and all the way into the M4 and stopped. So what are my thoughts on it? I don't know, be careful. I'm so glad I jammed my stop on that though. Locked in profit while I still could. And I think I was short that for about a month, so I collected pretty good yield on it too. Stephen Editor said Euro Yen was a front run on Friday. Well, the way that so on Thursday I met with the swing trading group and I opened it up and I said, risk on or risk off? Make a decision. And I had everyone vote. And then we said, well, then that's easy. So, yeah, if you're a bear, yeah, done. If you're a bull, your buy zone's down here, but that's pretty obvious too. That's the thing, like, I don't know why you guys keep denying yourself of your destiny. If you're a bear, this is very, very bearish. If you're a bull, this is very, very bullish. I don't know what else you guys do. What do you do in between? Patience, discipline. Come on, set it up, knock it down. PBG says, yeah, I didn't up on yens last week because of the, yeah, last week's move was weird. I told you, I agreed with you guys on that one. Very weird. Last week's move on Wednesday was very strange. Probably, out of the 20 years I've been doing this, I haven't seen that happen very much at all. Like very few times. Less than a handful. Okay? So, what does it mean? I don't know. But right now, things are acting properly again. Glitch in the matrix? Fat fingers somewhere? I don't know. That's the thing. How would I know? Where would you find? I don't think you could even find out. So we have to see, is it a long-term thing or is it a short-term thing? Oh, Steven's like, yeah, it was in the swing trading group. Yeah, so that's it, right? So on Friday, you would have known that. So like on Friday, it actually says this, right? So on Friday, you knew this was your number, okay? So should you be short in here somewhere near 121? Yeah, there's no doubt. Yeah, absolutely. Because it opened down here, right? So you needed it to do this. And selling off 121 is as basic as it gets, right? You should know kick it off the psych level, lower low, lower high, low. Yeah. You should. Yeah, it opened 30 pips down. Exactly. Fill the gap. Boom. Okay. But yeah, should you be on this as a bear, Stephen? Yes. No doubt. Absolutely 1,000% yes. Okay. So in the case of it opening low, okay, up, 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 down, down. Okay, here's the gap, fills the gap. So this is right out of gap trading. Very, very straightforward. Okay, fill the gap, continue mission. Okay, throw in the psychological level. Look at this. Like, oh my God, right off of 121. That is, yep, you need to be able to catch that every day. Well, then you need a limit order, because look at this. So if you shorted at 121, you would have been risking what? That many pips? Easy, right? Now, even just a day trader, right? Even a tiny little day trader, where's the stop? So there's your entry. Oops. Hang on, let me get this a little more accurate. So here's your entry. Where's the stop? You just did the day trading course, right? Where's the stop? Even for a lousy, no good, stinking day trader. Where's the stop? There we go. So there's the stop. And where's the target? Right there. You'd be done by now with 100 pips in your pocket. It's so easy. That's straight out of the day trading course. We just did that last week. Like, oh my God. Asia's up, so London's down, bro. But the thing is that fold in swing trading, you knew this was your price last week. I think we were here on Thursday, right? So it's like you should be here. There should be another one there. Should be another one here. You should be destroying this, right? Oh my God. Straight out of the day trading course, right? Even the target. Look at the target. Right, day traders? Like we just did this. We just spent 3 days last week of me showing you step by step by step by step how to day trade, where the stop is, where the target is. And we just hit the exact target and it just went full stop. Yeah. Cool. Maybe Wayne is from the future. No. It's just technical analysis. What is my email? Wayne at fxbootcamp.com. You got to work on your entry, Stephen. Okay, Stephen, put it this way. You're a bear and you're in your sell zone. Okay? So when it opens inside your sell zone, which you knew the day on Friday and Thursday, like you knew all of this. So you got to have maybe a little more conviction. Maybe, I don't know. I'm not here to judge you, right? I don't know. But let's take a look at this. These are the exact prices you wanted to be in. So as it went up and up and up, you're in there. There's a psychological level. Dude, you need to, at least here's how I do it. When I'm in there, I'm going to say, is there a psych level? There's a psych level. I want to sell right next to that. And if you got to use a limit order to get in there, get in there. And you probably need a 50 pip stop. Okay? Which means you're doing a 51.50. Okay? Because day trading is a 33.99. So a 51.50, or you're doing a 100.300. Both of that, you can nail this and this easily on a euro yen. Okay? So you just can't miss this. And the only reason you missed it is, I don't believe you're unsure because you're a bear and you got the exact price range in which you should sell, and you see the double top and you see the psych level. Okay? So what you need to do is your stops must be too close is my guess. So you need to start trading with 100 and 300, right? You just need to start doing this for a while, which means you probably need to cut your lot size. Okay? Because you missed that. That's a free look, man. That's a free look. You had days to set that up. Okay? That's a free look. It won't get much easier than that. Okay? Okay? They're all a little bit different, right? You might have been expecting something more like this. Dude, no. You got to get better. Yeah, you got to get better. You can't miss that. Okay? So a sell, a psych, a double top, you're a bear, it opened low, have it come up, close the gap, hit the psych level, sell it, pop a stop and move on. Like you should be done in that first hour or two of Asia. So this is the Tokyo Open, right? So it went up this way and then down. You just have to be on that. Okay, you just have to. Okay, you just have to. That's it. That's the whole swing. You have to be on that. And you have to be comfortable losing. If you're wrong on that, you have to be comfortable with that. So your lot size has to be set appropriately. Okay? Right? No, I don't think he was scared. I think it was a timing issue that he was more wanted to be closer to London. And so he woke up early near the London Open and was already gone. Although I'd argue there was a sell here and there's a sell here. Okay? But this is a swing trade. So if you're a swing trader, that has to be like an easy trade for you. Okay? That has to be an easy trade for you. That's it. Like that's a very, 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 very clear swing trade. So he's got to be on that. That's fine. So it's usually a risk management issue. Now switching it over. Okay. We knew on Friday on a day trade. Check this out. On Friday, if you're a day trader, we had this as our sell zone. And the market opened here. And then what did it do? It came up to our day trade sell. This is even easier as a day trade. The other one was a weekly swing, which is extremely ridiculously tradable because of the double top and the pre-analyzed swing setup. But this is a day trade, and it even said, wait for it, wait for it, wait for it, wait for it, now! Boom, 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 off the 121, down, 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 down. Right? The day trade's even easier. Okay? And our target today is 119.93. We almost got that. Okay? And once again, I have to say it because it means something. The weekly, actually, let me redraw this. The weekly looked like this. We knew early last week that was the sell zone, right? Last week. And then on Friday, which is here on a double top, we knew this was our sell zone for Monday. We knew that on Friday. All right. So both of these as a bear need to be recognized. The double top with the drop and all that kind of stuff. This was wonderful. It saved you from getting in way too early and then down, 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 down. Cool. And here's our target for today. And our target for the week is way down here. Okay. Yeah, and that's what I'm saying. Stephen missed the entry. That happens. But here's what I'd rather you do. I'd rather you not just say, I missed it. And I get it. It happens. But, I'm trying to educate too, right? I want you to find out ways that you don't miss stuff like this. So you go to bed most likely in this period. So practice with limit orders. So in the day trading course, I gave you a risk management tool so you don't miss things like this, right? So I'd like you to say, all right, I want to get in somewhere around 121. It's inside my day zone. It's inside my week zone, right? This risk management tool I gave you was specifically for day trading. So specifically this scenario. So I want you to say, well, we're here and I'm not going to be up late enough and I need to go to bed. So I'm going to throw down near this 121 and I'm going to use my risk management tool and it's going to set the OCO for me and I'm going to go to bed. And you wake up and I guess London Open would have been in this period and you're halfway to your target. Why do gaps fill, Prince? Don't know. Just is. Okay. But I'm sure if you search on YouTube Wayne McDonald gaps, I've traded that or taught that for years. Gaps don't typically happen as much as they used to, but we used to gap fill like every weekend. I used to do something on Sunday afternoon. We'd do gap fills as a session. People paid like good money, and all we did was fill gaps. Okay? Forex student says, do they always fill? Well, how do you think I'm going to answer the always part? I'm never going to say something always does something. Right? Does it always? No. Does it usually? Yes. Does it often? Yes. Okay? So here is the usual strategy that often works. The gap fills because nature abhors a vacuum. And then the next thing I talk about is continue mission. And I've been saying this for 20 years. Not continue missing, continue mission. I've used these exact words for 20 years. Right? Fill the gap, continue mission. What do I mean by continue mission? It gapped down. So how do you fill a gap? It's got to go up. And then for whatever reason it dropped, it's going to continue the direction it opened. So if the gap is down, the mission is down. Okay? Fill the gap, continue mission. You can probably find me in 2004 teaching that. And 2014. Okay? Mark says, unfilled gaps are often the beginning of long-term trend. I wouldn't memorize that rule. You have so many million other things you can do to confirm all of that. An unfilled gap, as far as I'm concerned, is just an unfilled gap. What does it mean on the long run? You can look at it fundamentally, you can look at it technically, but I wouldn't memorize a rule like an unfilled gap is meaningful. Maybe. And you're probably right, but I wouldn't want you to think that way. Okay? Remember, I don't like rules. I'm an entrepreneur, so I like to know why. I want to know why, not what should I do? Like, why does it do this? Because then I can make decisions. I don't want rules. I want the ability, the autonomy to make decisions, right? So that's why, right? That's why I don't want to even think that way. I don't want to even hear it. The gap fills, and that's a big, meaningful, deep... No. The big, meaningful, deep thing that creates and destroys trends is central banking policy. That's the one thing. Okay? Yeah, that's all, right? Yeah, Stephen, like, yeah, I wasn't being harsh on you or anything. And I wasn't saying you did anything wrong, right? It's just like, that's what I taught you how to do. We just came through that process of day trading and weekly swing trading. And you have to be on that. That's all I'm saying. And you'll get it next time. But I'd rather you now follow this up and say, what could I have done differently so that I was in that? Okay? That's how I want you to think. Figure that out. Open up a demo account, start practicing with limit orders and that risk management tool I gave you. Okay? And then practice and practice. It's like me taking you out on a putting green. I'm like, well, hit another putt. Hit another 100 putts. That's all I'm asking you to do. Bust out a demo account, get ready with those OCOs, and practice that 100 times. Yeah. And putt. Do it again. 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 Okay? Okay, here's a massive gap. Didn't quite even make it to the sell zone. Yep, hard to catch that one. So the thing is, what are you going to do next? Well, go through the process. Identify your support and resistance and start predicting the future. Okay? Your most recent choice on this one was to sell the 21. 21 predicts a lower low, doesn't it? And it will continue falling until it breaches the 21 and tickles the 55. So the moving average right now is saying it will fall and it will break. We're caught on a psych level, right? So you're bearish and aggressive, but if it jumps up to the 55, now you got to be really concerned. Okay? Selling here, you're not concerned. Okay? Why? Because you're below the 21, and as far as you're concerned, it will stay that way forever and ever 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 until this 21 gets breached. Okay? Which means you're predicting the future will look this way. Okay? Question about exotics. So like I just said, I know we're in the monthly reversal zone. Okay, let's get off this. Bum, 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 bum. Where'd she go, eh? Right here. So, like, see I had this all committed to memory? Yeah, so if you were going to be an aggressive bear, yeah, right in here is where you do it. But you have to understand you're not being patient, nor are you being disciplined. You're betting. Okay? Okay? So where's your reversal pattern? Anyways, where's the reversal pattern? You don't have one. So it's a guess. It's a bet. You're gambling. Okay? But you have the right price, there's no doubt. But you don't have trend. So trend, no. Price, yes. Okay? Pattern? No. So all you have is the right price. Medi, you have to use the template. The template has all the settings pre-done. That's why I gave you a template. Okay. So here's how I'd rather you do it, HK. Okay. The next step is this and this, or some variation of that, like this and this. Okay. Or a variation of that, which is this, this, and this. Okay. Because then you have price, and then at least you have price and pattern, and then you won't have the trend until you get the full-on reversal. Okay? So there's a better way of doing it. That's all, HK. There's a less risky. Okay? So this says this at the very least. So if you're sold up here, I get it, but it's a gamble. Now, if you're trading it on a 1-minute chart or a 5-minute chart and you're trying to pick up some crumbs, great. But that's not neither here nor there. So there are 3 bounce zones here that are most likely going to stop this decline. So let's say it does this, and then this. So you're probably a day early. Okay. Well, like with day trading, right? So some people are saying it's crazy and all that kind of stuff. Well, in day trading, we have rules of engagement, quite a few things that you need to check before you start throwing down trades. And so based on the day trading course I just finished with everybody, there is no trade here. Okay? It's too aggressive. But would I trade this? Oh, for sure. Would I trade this? Oh, for sure. Okay. So if I was a bull, I'd be buying it right here. Okay. So I got a big day today. Like I said, I got 5 hours of classes. I got to do some reading today. I gotta go. Gotta go, man. Gotta go. Gotta move. So thank you for being here today. Thank you for being a subscriber of Forex.Today. Please make sure Traders Way knows that these webinars are important to you. Make sure you show that by visiting tradersway.com, opening up a demo account, and maybe in the future you open a real account. And of course, please leave comments on the recordings, not just in the chat. Under the recording of today's video, please leave a written comment, because that is an indication to YouTube that you believe this is quality content. So would you please support our community by giving a like, but also leaving a comment under the video. Again, that supports the community by telling YouTube this is quality content. If you believe that's true, please take some action. Peace on earth. May the pips be with you. May your profits be above average. I'll see you on Tuesday. I'll see you on Wednesday. I'll see you on Thursday. And I'll see you on Friday. Thank you very much for being in my life.